Welcome back to Making Money Matter. I'm your host, Kerry Stevenson, and today I've asked Peter Grandich to come on and join us to talk things economic, what's going on in this crazy world we live in. And as I speak to him today, it is the meeting of the BRICS in South Africa. So there could be a lot coming out of that. There could be some interesting, ramifications globally, or maybe then it won't. Maybe it'll be a damp squib. But I really want to hear Peter's views on this and to share with you, our audience, about how we can protect our wealth going forward in this crazy world we currently live in. Lots going on, Peter. Thanks so much for joining me on Making Money Matter.
Thank you for having me. It's a real pleasure.
Peter, given this is the first time our audience has met with you, you live in New Jersey over there in the US. Your website is petergrandich.com. You joined Wall Street back in the 80s, and I love the book you wrote, which is Confessions of a Wall Street Whiz Kid. And I guess that comes from the fact that when you joined Wall Street, you really didn't have any formal education, but within 3 years, you became head of investment strategy, which is quite the climb. But could you give our viewers your background and why you can comment on economics, your interest in it?
Sure, you're correct. I actually entered Wall Street only because as a warehouse manager, I lost money through a penny stockbroker. And I started an investors club, was discovered by a gentleman that ran the brokerage firm and convinced me to become a stockbroker, which we would call back then. And within weeks, I wanted to quit because I couldn't cold call. And the first person that hung up, I was done. I couldn't make another call. So he actually wrote a newsletter, and I followed him by starting to publish just a simple thing. And one thing led to another. And like you said, within 3 years, I found myself head of investment strategy for a New York Stock Exchange member firm. And I put out a forecast of a crash. And the firm wanted me to retract it or resign. I didn't. October 1987 came, and we had the crash. So the day after that crash, I decided to tell everybody that it's going to be happy days are here again. In 2 years, there'll be a new high. And the market did that. And on Wall Street, you could live off one good call for 10, 20, 30 years, but made a few others, worked on different ends of the business. And here I am into my 40th year in and around the financial arena. And it's all changed from what it was back then. There's really nothing left of how markets operate and how people operate it. And I wouldn't trade the on-the-job training for anything they could have told me in school. So it's really been much more beneficial, I think, to be in it than having somebody tell me some textbook story and then try to go live it.
It's interesting. You went back to the fact that you made the call for the 1987 crash. I'm curious as to how you predicted that. Was that patterns that you saw? What was it that allowed you to do that? Because that will bring us into today. But I just want to find out, does history repeat? But how did you pick that during those days?
Well, I would have told you in the first half of my life, when I was a legend in my own mind and I was reading my own press clippings, that I would have told you I came up with some sophisticated, special design plan. But to this day, the real honest answer is I have no idea why I said it. I mean, I have it in the sense that I believe it was gifted to me so I can end up doing some of the things I did and some of the bad things I did, which hopefully teach people not to do. But there was no specific factor at that time, other than, which sounds really crazy when the Dow was only 2,000 and something, that had gotten way ahead of itself. And people were, predicting, kind of like it was 2 years ago. There's always, in my opinion, a built-in "don't worry, be happy" crowd on Wall Street. And I think it's like that in a lot of financial parts of the world. And my argument with them, always the same, Kerry, is you can throw them off the top of the Empire State Building and they all say the same thing all the way down. Hey, so far, so good. And, unfortunately, that doesn't end up being the case. And so at that point in time, I think it was more of just a bet against the mood at the time and just saying that, hey, I'm this nobody. I'm only in this. And all these so-called experts says we're going to the moon. Oh, wait a minute. I think that was more of it than any special formula that derived the reason for doing that.
We're going to the moon. Everything's okay. Sounds like history might be repeating itself as I speak to you in August of 2023. There's confusion in the market, but there's also people have this optimism that everything's going to be okay, although parts of the market seem to be wobbling quite a lot.
Well, I've never been more bearish. I've taken an attitude it's better to be a live chicken versus a dead duck. And one of the main reasons for that, Kerry, is that 40 years ago, we were the world's, meaning the U.S., largest credited nation.
Yeah.
Now we have, this is still hard for me to say, 33 trillion, not billion, $1 trillion in hard debt. Now, that doesn't count that we still going to have to pay Social Security, Medicare, and Medicaid. We now have multi-trillion dollar deficits. And our CBO, which is really the last almost unbiased government agency left in the U.S., Congressional Budget Office, says that in less than 9 years, we'll be at $50 trillion. Well, put a 5% interest rate on that, $2.5 trillion in interest expense. Know that the best year we've ever had for revenue was last year, just about $5 trillion. And it's unsustainable. It's literally, so I like to say to these don't worry, be happy crowd, okay, next 6 months, yeah, you could keep having a party. Maybe you could stretch the party a couple of years, but not in the too distant future where most of your clients are still going to be around and hopeful, trying to survive and prosper. It's unattainable. We can't not continue that way. Something of great significance has to happen because we're not going to be able to pay the interest on the debt and still have a government run the way that we do. And they all basically do the same thing. And they just go on to something else as if it's not going to happen. And I find that preposterous. And then when you think in all the other changes that are happening, you brought up, I think is going to be my personal opinion on the BRICS, like you said, going into, I don't think this news story is going to be revolutionary. I mean, there's some people speculating there's going to be a gold currency. But this is what I say about the BRICS. Within 1 to 3 years, what they will become will be to world trade what the Industrial Revolution became to world trade. That's how significant it's going to be. That at the bare minimum, many countries who would normally be, yes, USA, are going to be goodbye, USA, goodbye, USA, and trading among themselves and possibly not even using our currency at all and just using their own currencies. And the implications for that and what that will accelerate the debt problem the U.S. already has is, it's amazing that to hear still here in the U.S. anyway, and I don't know how it's covered overseas as much, no real talk about that. How are we going to function? How are we going to do all these things? And then downplay, it's just the BRICS, and they're all a bunch of loser countries. I've heard the don't worry, be happy crowd say that and all that. I said, well, let me just tell you one thing. Saudi Arabia, which our president vetoed when he went over and tried to bully them when we were having our energy crisis, pushed them into the hands of China, who went ahead and negotiated and got Saudi Arabia to come to peace terms with its mortal enemy, Iran, and begin dealing with the Shanghai Bank, which is part of the BRIC nation, and openly state that they would consider not using dollars for the oil. And people don't understand. If you don't know what the petrodollar is about, you don't know how basically we in the 70s, the U.S. forced Saudi Arabia to exclusively use the dollar in exchange for our protection and so forth. And to hear them openly talk about that, my biggest news looking for this announcement is Saudi Arabia joining the BRIC nations. And if they do, which I think they're gonna, to me, that's world-changing, life-changing, and you better start to understand what that's going to mean to all of us.
Does that also mean, because as I sit and speak to you today, the US dollar is continuing on its upward trajectory. The poor old Aussie dollar has lost 5% of its value just in the past 12 months, and it seems to be getting weaker while the US dollar is getting stronger. Do you think that potentially there's going to be a change post-BRICS, that this the strength of the US dollar might stumble a little bit?
First of all, we are being more driven by sharp interest rate rise, especially on the short end.
Mm.
And that has really helped keep the
Yeah.
dollar where it's at. I also think that people now have made a potential big bet that can come back to bite them if the interest rates keep going up. People say, well, chances are it's not, because inflation's definitely tempering from where it was and so forth and so on. But no one takes into account here in the States that part of the reason interest rates can remain high, having nothing to do with inflation, is the fact that we keep having to borrow more and more. And
Yeah.
the only way we're going to attract that is to pay higher and higher interest rates at a time when our banking system has become very fragile. The top premier too big to fails are okay. But when you look below that now, where our 10-year treasury just went to, every bank that holds that paper right now has a loss on paper
Wow.
because of what price it's at now. And remember, our crisis from a few months ago came when they had to recognize those losses and people became concerned and made runs on those banks. So there's a lot of ammunition out there. Can the dollar still stay up for a little bit? Yes, but its days as the world reserve currency
Yeah.
is numbered, because the BRIC situation is real. It's not a phenomena. It's not a bottle rocket's going to go up and then disappear and not go anywhere. It's just going to gain more and more momentum. It may take 1 to 3 years, but it's going to rival and have as much influence on world trade as the Industrial Revolution did.
Peter, I know you also you look globally at what's going on. Again, as I speak to you, China seems to be in a whole world of hurt. The property market's coming back. China's not quite sure what to do. It seems to be losing a little bit of its power, if you like, in the world, and that has implications for us here in Australia, given of our exports to China, etc. What's your view on China? Are they going to get through this, or are they going to have to take some serious action?
They'll eventually take, as every government does. No government, even communist-led, wants to have real deflationary, depression-like atmospheres. People react far more negative than diluting your dollar. So the expectation should be is that if it continues to look worse, and at the moment that's how it does, that they will take some actions. I also think you have to recognize that China's just not going to grow at the rates that it once did. Okay, it's not the pure exporting machine, cheap labor, and beat everybody around the world. And COVID killed globalization. That's why the world's going to break up into these regional trading partners. Now that impacts your country much more at this point than some other countries and all. But to say that China is just going to somehow fold and not be any type of a power, I'll tell you what my concern is, and I'm not a warmonger. I don't like war at all. But one of the ways that things start to get real tough in China and the people start to kick up, at least they used to do it here in America, is one of the things that gets people's minds off bad economies is wars or battles
Yeah.
that they can point to. And that could expedite whatever their plans have been regarding Taiwan. That is what a concern that I have here. And they keep building up, and you can only fluster and play chicken so long.
Yeah.
And then either you really are chicken and people see it for what it is, or you end up showing it's not chicken. And I think because of what's happening in China internally, it may expedite whatever their plans were. From everything that I can see, their plans is that they still believe they should all be under one umbrella, just as what they took to, even though when they first said, oh no, Hong Kong will always keep its independence.
Yeah.
Well, they kind of broke that down. That's how I see what they hope to be Taiwan. I don't think they want to go to war if they don't have to, but I wouldn't say that having war is impossible. And sometimes you get pushed into these things. Sometimes, and sometimes they just happen accidentally. And let's not lose sight that I'll tell you my biggest thing that I'm aggravated as an American, and I think it has implications all around the world, including in your area of the world. 20 years ago, we'd be having a conversation. I'd be talking to other money managers and all, be going, having lunch. Hey, did you hear about that South American country, the guy that used to be president? He was trying to run again, and they either killed him, they locked him up, they charged him with all sorts of crimes. And at the same time, the current administration is saying they're doing all sorts of bad things and they've been criminals and all. And we used to say, yeah, that's a banana republic. Well, guess what? America now is a banana republic.
Jeez.
We have a
Yeah.
we have a past president who was running again, is being charged, but I don't know how many counts of different things, by a current administration that has its own baggage, which is opening up more and more each day and all. And our two parties, I don't think you can go in a room now and do anything that's doable that could be fix any major problem, including a financial crisis and all. There's so much hatred. In fact, there's no more middle in America.
No.
You're either left or right. There's no independence or whatever they want to call themselves and all. So we have both political and geopolitical at a time when our financial service industry, which is vast majority of advisors are in the business 15 years or less, have really never had to deal with geopolitical issues into their thinking and political. And now those things become front and center. So there's a lot of worries and to be worried here in the United States. And again, if you're investing past the next couple of years, we have a problem, a doomsday machine. It's called our debt, and it's ticking. And one day it's going to not tick anymore, and you don't want to be around when it stops ticking.
Yeah, and I understand what you're saying with that, but people have been saying this for quite some time now, that the balloon keeps getting bigger. But I guess governments are there to keep printing, and then it becomes just a numbers game. You said just before that the US debt is in the trillions, the 30 trillions, and it just keeps growing. But won't they just keep printing?
Well, let's just say we do that. Let's just say, like you said, we got to get to the point where we run $5 trillion budget deficit a year, because we have to print so much money just to keep paying a higher and higher. It's like the mob. You're paying your points, and you can never get in front of it and all. Well, a lot of other things are going to suffer. They're not going to be able to do some of the things that they might have done years ago and all. And one of the growth industries in America right now, and I don't know how much is shown in Australia, is criminality. It's a growth industry.
Yeah.
I mean, we are allowing hordes of youth to adults to go into people's other businesses and take what they have without paying for it. And that's a very nice way of putting it, okay? And the more people see that, and that they're not facing justice because of it, the more it's going to increase.
Mm-hmm.
And we are at a point now where there are certain groups that are just saying enough is enough. I mean, there isn't a major city in the United States that isn't suffering downtrending in office occupation, homelessness issues, all sorts of, and of course, tax revenues are declining, so services drop, and it becomes a bit of viciousness. And eventually, it gets to the point where it doesn't just stay in the cities; it reaches out into suburbia and middle America, if that's still what it's called and all. And middle America is growing pretty tired of it. And so the social issues combined with the political and economics, to me, makes this the worst ever in America's history. I don't think we've ever faced the combination of all of this, a worse period of time than we are in right now. And understand, Kerry, I don't sell stuff that profits from the fear of all this.
Yeah.
I don't have cabins, dry food, ammunition, or anything for sale. Okay, I still have a legitimate planning business, and trust me, most Americans don't like hearing what you and I just discussed. It doesn't cause people to run to my office; it causes people to run away from my office.
100%. So you just said you have clients that you plan for. We have an audience. This is a channel called Making Money Matter. We have an audience that is looking as to how they can make sure that they can have a decent sort of life. How do you plan, you for your clients, or what are your views on how do you plan in these incredibly challenging, as you said before, geopolitical times where, most planners haven't even gone through any sort of geopolitical challenge in the past? That's what's going to be the challenge going forward. How do you plan?
So here in America, and you would know how, if this falls in line in Australia, is I find about 7 out of 10 families live at least one financial level above what their true conservative finances support. And everybody says, well, how do they do that? Well, they get more in debt, which we are, and they don't put away for what they need for the future. We have a retirement crisis in America. 65% of Americans are working paycheck to paycheck. They will never be able to
65.
achieve 65%.
Wow.
They'll never be able to achieve savings enough to live that so-called last 20, 25% of our lives in some sort of comfort or lifestyle that supposedly we're called to do. So one of the first things I tell everybody is working debt off the ledger versus onto the ledger is a good choice. The second is less is more. Now, that comes from somebody in their first 20 years that thought the more stuff I'd have, the more money I make, the more happy I would be. That is a big fib, so at least for most people. And so a less is more attitude. Our parents and grandparents, and I think all around the world, I think this could be said about different societies, didn't have all the things that the current generation feels that it needs and wants to have. And yet they weren't in any worse shape and probably better shape mentally and physically than we are now. And so I think no matter where you are, and I think you also have to operate under that governments are becoming very clandestine. It's becoming independence and freedom of independence, and our privacy is greatly disappearing. And probably one of the things to talk about is the digital currencies are the last bastion for them not to have full control and basically tell us what we can say or do. If you think about it, I grew up in a generation where cash was king, and having cash in your pocket was, you were something if you had some cash in your pocket. But basically want to create a cashless society. Now they'll give you reasons they claim for it, but it really basically then can influence you and really control and see what you're up to, and could then clamp down and make it much tougher for you to not listen to what they think is the best interest for you when you can't even have certain monies, or if you travel, they can know if you're going from here to there to there to where. And that is to me the biggest concern. And of course, people will say, well, own physical bullion. Yes, physical bullion is prudent, but how much can you have? How much can you individually control over yourself? And then eventually, you still have to turn it into something, or that person that's going to accept it and say, well, I can't sell you a car anymore because everything's reported. One of the other things that this is being done, and it also targets, and that's why they hated Bitcoin and cryptocurrencies, because people were able to transact things without the government being involved and knowing. And unfortunately, a lot of illegal things happen that way. But what's going to happen now is you can't really work for cash. A lot of people worked for cash. There was always that under economy that people didn't talk about, and making us into digital dollars is basically going to make that very, very difficult. Here in the US, one of the things people start to complain about, again, it's not on the national news, but you talk to enough people and you read enough worthy websites. You go in a bank now and you normally take out $100 or $200, and now suddenly you take out $3,000 or $5,000. The bank asks you, what are you doing? Even though they have no legal right to ask you for that, it's your money. They ask you, and they ask you under the pretense, well, we're really concerned there's scammers out there and so forth and so on. But that's not the real reason that they're asking. And that's why one of the things that the Bidens didn't realize they were doing when they were doing all these wires and things to their companies, all those banks kept making reports because that's what they have to do. There's too much money moving around. And when you got 180 of them, suspicious transaction reports, you're going to get noticed. So one of the things that isn't yet on everybody's mind, because we've had so much, we came out of the COVID stuff, they're talking about it again and, kind of stuff, is this cashless society and what's life going to be like that? It's certainly not going to bring the freedoms that many of us who are a little bit older remember what it was like to have.
Do you know, Peter, it's interesting. You said $3,000 to $5,000. It was only 2 weeks ago here in Australia where I paid a bill, a legitimate bill, and I can tell you exactly what it was. It was $1,945. Within seconds, my online banking was frozen. I was shut out. I had to call the bank. I spent an hour and 10 minutes, time that I will never get back in my life, on the phone to the bank, arguing that I knew what this was for. It was absolutely fine. And this person who I could hardly understand kept saying that they needed to triple check it. And I said, what do you need to triple check? I haven't, well, we don't believe that this is a legitimate transaction. So I had to go through all these hoops. Then I said to them, right, I'll bring the person I'm paying the money to onto the phone. To which the bank said, no, we're not allowed to talk to third parties. And again, it went on and on. I tell you, Peter, it sent a shiver down my spine of how quickly they could just turn off the access, because this was my business. That was my business. They could turn my business account off and I had no access to funds whatsoever. Ladies and gentlemen, if you don't think this is coming, and I'm not being a conspiracy theorist, it's here. They can switch on or switch off as they please. And Peter, I don't know what the answer is. All I do know is the control is getting pretty hot at the moment.
Well, I like to say, and I'm certain not the first person that says it, wherever George Orwell is, he's going right now. I only missed it by a few years, 1984, 2024. That wasn't that much.
I know, it's great. You know, I've reread the book recently, and yeah, it is. Look, let's move away a little bit from that, if you like, because what I want to do, Peter, and we don't have a lot of time left, is I want to find out from you, would you protect your wealth and go into bullion? Would you look at the shiny stuff going into the green economy and say, let's put some money into lithium and copper and things that are fueling the new economy? Would you stay in cash? Or would you be wider than that and say, look, you've got to be across a number of things to protect your wealth?
Well, there's still going to be economies going forward. There still seems to be a heavy tilt by most important nations or majority of nations to a greening effect, whatever you want to call it. And so we have seen just an absolute, almost a void of real money going into mining in a big way for over a decade.
Yeah.
And now those same mining companies who 20 or 30 years ago had very little concern other than small little areas of the world where they might think twice about going, have seen that world shrink. There's far more many of those places that concern them economically, socially, politically. And governments aren't exactly friendly to them. Look at the oil industry here. When we had our last energy crisis, everything Biden blamed was on the oil industries. Mm-hmm. And what did he do? He shut off pipelines. He shut off exploration. And he pointed them, you're bad people. Now, if I'm them, why would I want to go out now and spend oodles of new money to look for new resources, especially when they're telling me, well, we think you're going to be obsolete. We don't think people should even consider having oil 10 years from now. We're hoping everything is non-oil. The same thing has happened in the metal industries to a lesser degree. And so you need copper, you need the lithium for the batteries, you need all these things. And there's just not been that ability. And even if tomorrow someone decided to say, hey, listen, we really got to go out and we got to do this in a big way, this takes years to develop. Mm-hmm. And major mining companies, and again, I have to speak only about North Americans. I'm sorry, I don't follow the Australian market, but major mining companies in North America have greatly reduced their exploration teams over these last several years. They're not a large part of their business like it was 20 years ago. And part of that reason is they've grown more accustomed to allowing the juniors to do the grunt work, let them make the discoveries and so forth and so on. And so they are sitting in a very advantageous position now because of what happened in the price of the junior resource market. It is, I would have told you 6 months ago, if we were having this conversation back then, and you would ask me, if you may ask me now, Peter, is this the bottom? I would have said, yeah, absolutely yes.
Wow.
these things are ridiculously priced. They can't possibly go lower. Then I look at my statements the last 6 months and I go, how can this be? Especially where the metal prices are. And so one of the things I think you can count on, and I don't think it'll be limited to North America, is major mining companies are going to become much more active in the M&A field. Because if we are to meet any of these clear decreasing demand markets that are coming, there has to be a lot of new money poured in and quickly try to develop additional resources, which are going to require, by the way, higher prices. This at 350 copper, even though that sounds like a lot US because it used to trade at 2. You talk to I've talked to some of the major producers. They said until we get to $5 and above, who's going to throw billions and billions of dollars to find new deposits, which are going to need $5 prices because of where they're at, and also where you're also at is going to pay a premium as well. And so copper, the safest one right now is uranium. That market outside of an accident, which please God we never want to see in all, can only go higher because the world has discovered we're not going to make it just on wind and solar, and the other things. Nuclear energy has to be a critical part if we're going to build up. We have trouble, and I don't know how it is in Australia, but here in the US, we have brownouts like normal now, meaning that we have struggling just to produce power now. Our grid system, I think Thomas Edison built some of it that's still being used. I mean, that's another growth industry, infrastructure, and the power and all. So I think certain metals, I think it's a mistake to think that we're not going to see another energy crisis. People, again, here quietly, without much fanfare, oil's back above $80 and the natural gas is ticking up again. And guess what? We haven't done anything to make alternatives a flip of a switch move. And some people are also questioning now, is the EV market everything it's cut out to be? Is it's going to be as simple? There's not going to be any problems owning these cars. There's not going to be a problem servicing them and so forth. So I still like to fall back on some of the old-fashioned things. And you know what? The oldest fashioned things right now is gold and silver.
Yay! You've said music to my ears.
Well, it just is. It just is. They have this tremendous technical pattern. And I keep telling this to people, and I know they're becoming impatient because I become impatient. And I used to think I was more of the more patient people. But we've been in a 10-year chart pattern on both gold and silver, known as a cup and a handle. And 80% of the times the cup handle breaks to the up. And when they break to the up, the longer the handle was, the bigger the move will be. And so despite really disappointment in people and the markets are sideways and all, hey, they're still fairly nicely priced. We're within striking distance of $2,000 gold in the US. Some currencies is actually doing much better because of the strength of the dollar and so forth. So I still think you fall back on the old reliable, the gold, the silver. You speculate a little bit more on the coppers, the lithiums, and the uranium. And I think general equities need to be the least of one's holdings at this point. I sooner would want to own high-grade government bonds at 5%. If I can get 5% now, some countries are at 6 or 7 now. And, it's going to be hard for the stock market. I'll tell you what I think the big surprise will be if we live long enough, Kerry, is that as great as we had above average returns for a few decades in the US, I think the next couple of decades will be under. And people have built their lifestyle on a continuing higher performing market.
100%.
And even though it may not crash, I'm not in the crash camp, I'm not seeing 50, 80% down, but not making the numbers that it used to make is really going to impact people who've grown accustomed to that.
All right, Peter, we're running out of time. I just want to ask you 2 final questions. You have said most recently that recession is on the cards. A brief comment about that, and then I just want to do a final comment from you. But you said recently recession is on the cards. Do you think that's a global recession?
I was not in the recession camp for early 2023. I said a year ago, it probably come closer to 2024. And I think that's where we're heading. I think we're going to see the US really tail off. The thing that changed, and it impacts you as much, if not more, than it does us at the moment, and that's what's happening in China.
Yeah.
And it can still go either way. It's not detrimental that it's just collapsing, and it's not certain they're just going to come in and save the day and go. And I said this since early spring. How goes China in terms of economics? How goes the world? So on the assumption that it looks a little bit more dicey now than it did back then, you have to think that the world is probably going to be impacted more from it than we might have thought 6 months ago.
All right. So how do you recession-proof a portfolio? Do you go back to, as you said, the golds and the silvers as your base case?
Yeah. And don't let that dirty word that the don't worry, be happy crowd said is a terrible 4-letter word, cash, bother you. You know, earning a couple percent and being in a position to be liquid, because there's going to be a lot of people who are going to be illiquid and have issues that projects and properties and things like that are going to become available that those who are in a good liquid position could take advantage of.
Okay, so he's not calling the bottom yet, ladies and gentlemen. Peter Grandich, it's been an absolute pleasure. Final call to you. What would you say to our audience out there is the best way for them to protect? This is not investment advice, ladies and gentlemen, so please talk to your investment advisor. This is Peter and I having a bit of a conversation, but Peter's been in these markets since the 80s. He called the crash of 87. He's a little bit concerned at the moment and just wants us to be a little bit cautious. But Peter, the final word goes to you.
Do yourself a budget, take good hold to see how you're spending money. People are always shocked to find that they're spending more than they have to. Live a less is more lifestyle, and don't get mad at counting to 10. This world now, you got to count to 100.
Peter Grandich from petergrandich.com. Thank you so much for joining me on Making Money Matter. Let's get you back again. Let's keep chatting, because I think it's information that all of our audience would love to hear from you again. And thank you so much for your time. Ladies and gentlemen, if you want to go and buy Confessions of a Wall Street Whiz Kid, I found this fascinating. It was published in 2011. The second edition was 2014. There was a third edition in 2015. There was a fourth in 2019. There was a fifth in 2021. Confessions of a Wall Street Whiz Kid.
And Carrie, let me just correct you now. It's called Confessions of a Former Wall Street Whiz Kid. And the reason I use former is once I started to be more wrong than right for a few years, I didn't think I can call myself a whiz kid anymore. So it's Confessions of a Former Wall Street Whiz Kid.
Thank you for the correction. Go check it out on Amazon.com, Peter Grandich. Thanks so much for joining me on Making Money Matter.
Thank you, Carrie.